Welcome to the Locke in Your Success Options Trading for Income Weekly Update for August 18th, 2014. Before we get going, I'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And please be aware that we do use hypothetical computer-simulated trades that are believed to be as accurately represented as possible. However, actual profit and loss may vary. If you watch this on YouTube or some other venue, please come on over to our website, check out our programs, M3 Bearish Butterfly ROCK, M21 Group Coaching, Trading Triangle, one-on-one coaching programs, and join our mailing list, get your free report, 7 Secrets to Become a Successful Trader, and sign up for this free weekly webinar. Also, stay tuned for our programs currently in development, which I'm diligently working on as quickly as I can. Okay, so let's take a look at what's going on in the markets. As of right now, we're kind of still in that technical limbo state where we're getting conflicting technicals, and we're just kind of sitting here waiting for some kind of news to push the market past an important level. And once that happens, we'll get an idea of where the market's headed in the short term, but as of right now, we're still in limbo. Because of this, last week, I was saying the most likely movement was for the markets to rise to their resistance levels unless we got some sort of bad news to push them down. And what we got last week is we got the markets kind of pushing up. We had the NASDAQ pushed up to previous highs. We had the SPX, which came into this resistance level here at its 250-day moving averages, as well as its horizontal resistance range. We had the Dow, which came up. It's kind of touching this backside of this trend line. And the Russell is just kind of coming into this 1150 to 1165 resistance range here that we have. So we have a couple of what we call dirty resistance ranges in the SPX and in the Russell. Very clean one in the NASDAQ and a fairly clean one in the Dow. So we're up at those levels now. With the move today, if it holds, we do get a technical breakout in the NASDAQ, which is significant. We're going to get this break to new highs. That holding is likely going to pull the SPX to previous highs. It's likely going to pull the Dow probably deep into the backside of this trend line. You have to remember this trend line is on a weekly chart, and this is not an exact level. So for us to penetrate over that wouldn't be a really big surprise and go towards our more horizontal range in here, which I guess if you look at it is kind of a dirty range also. We have a resistance range here, but it'll probably pull us up into that. And it'll probably take the Russell to the top of this range here up to the around the 1170 area, and that should that's what I would say would be the path of least resistance here, keeping in mind that a single indice breakout. So just because the NASDAQ breaks out, that's not, if I had all our indices breaking forward, I'd say even bad news at that point is only going to put us to a support point and the market is going to continue higher. If we are only getting a breakout in the NASDAQ, a breakout in a single index, to me isn't significant enough to beat off any kind of really bad news. Plus we have the other indices kind of in a resistance area. So bad news is still going to pull the markets down, but I'm still saying lack of bad news, we go up to those points that I mentioned. We'll get a pop in the NASDAQ and we'll get, if we go just to the Russell, probably up to the 1170 range. And then when the NASDAQ breaks down and test support, we'll probably wander sideways a little bit in Russell. And to avoid any kind of a bad news, we'll probably most likely go higher. If we get bad news, we'll probably just stay in the range. So that's what that's what I'm kind of thinking. Leaning a little bit towards the bullish side, as I have been for quite some time, knowing that the markets in general look like they're pulling more into a sideways range, with the exception of the NASDAQ, which is very, very bullish. So that's my thoughts on the markets going forward. And I just have a question here. I already started an October Bearish Butterfly at 1120. Okay, which is way up at, okay, great. Is the Russell weak enough to not get into trouble, or is it really early? What you're going to want to do is watch the other indices. The NASDAQ breakout is the first clue. If we get a breakout of, in other words, I'm not too concerned about the NASDAQ breakout, and that's going to bring us, like I said, 1170 area. If the SPX follows and breaks higher, then I would take that as confirmation that Russell's probably going to 1210. If the SPX kind of hits resistance and backs off and pulls the NASDAQ back down underneath the highs that we're at now, then I would say you probably don't really have an issue. But certainly if NASDAQ comes down, tests support, and breaks the SPX higher, then that's going to be an issue for the bearish butterfly probably, because we're probably going to go to 1220 here. That's usually the way they're going to interact with each other. So that's my thought on that. All right, so let's look at our positions. So last week, we had one August trade left on. We had the August V Condor, and this was the position we were in last week, and it's the position we expired it in. So as of Thursday afternoon, this is what this position looked like. This ended up being expired for $633 gain, which is a small gain, only about 1.3%. But it did put us with all four trades positive for the month. So if we take a look at what's going on in for the year and for the month, we had our Bearish Butterfly, which came back at 10.8. We had our M3 at 10.3. We had our ROCK trade at 10.2. The M3 is on the high side of its normal. It's a little bit more than normal. The Bearish Butterfly was a lowered profit target, as was the ROCK trade, because of the increased volatility that we have kept us into an M3 configuration. The V trade continues to struggle and just came back with a minor gain. What this puts us for the year is 97.6%. This is as far as closed trades goes for the Bearish Butterfly, which is about average for that trade. Usually this is going to take a loss early in the year, which is this month was April. It's usually March or April, sometimes May. Usually one of these months is a problem, and usually one of the months of September, October, or November is an issue as well. So I wouldn't be surprised to see another loss this year. That said, the rest of the months should be fine. I mean, if history is a guide, right, the rest of the months should be fine. We should be on track for our estimated 140 on planned capital for the year. That's pretty much on track. M3 is at 59.5%, which is pretty much guaranteed to exceed our expectations on the M3 for the year. I mean, we may still take another loss, but over a 4-month period, the chances of this losing more than once would be very, very minimal. So this is probably going to be a better than average year. The ROCK trade here has been hasn't been performed spectacularly all year. I mean, it's been performing well. We've had our wins all year, but the gains have been a little muted because the market's been a little choppy, and we've been in an M3 a lot this year. So still, though, 80.7%, which is pretty much on track for the year. Possible, I think we're going to be a little under the 120, but still should be a very good year for this trade. Like I said, of course, we can't tell the future, and we could still have some losses the remainder of the year. You never know, but it's looking really nice. And the V trade here is doing more poorly than normal. Still up 11.9%, so doing okay, but it is definitely down from where it is on a normal year, because this does not like a choppy market, where the Bearish Butterfly does tend to like a choppy market, as does the M3. So that's what we're doing for the year. So looking good so far, and we'll see what the last 4 months of the year bring. All right, let's go into our September trades. We had V Condor, and like I said, the market's been relatively flat, so hasn't been a whole lot of action here on our V Condor for September. We have had no adjustments. We continue to be kind of in the center in the V here. This is looking great. If the market does what we kind of expect it to and creep higher, we got up into this range here at 1170. We start pulling out this V. Should be a fairly decent month with this, and hopefully make up for poor performance of last month. Maybe get 3,000 or 4,000 out of this. That's what I'm thinking, at least this year, this cycle. Unless something really weird happens, this will probably be a good month for this. The September. What else we got here going on in September? We have a September Bearish Butterfly, which had no adjustments either. This position, as of Thursday, let's hop into Friday, which we didn't have a whole lot of market movement on Friday. It's just a lot of chop. As of Friday, it was up about 36.80. We're still in our single 1100 butterfly. We have an add point here at 1160. We will hit a delta theta problem prior to that point, so we will, if the market does continue up, we'll be rolling this 1120 to 1140, adding an 1160, and rolling it from there. I think this should do okay for the month unless we get some sort of a crazy breakout to the upside that's really extended, but any kind of a normal breakout that holds under 1200 should be fairly good here. So that's what we got going on for September. I mean, it may draw down, but it should be fine for the trade. So this is looking perfectly fine. We have, so no adjustments there. I did make an adjustment to the M3 trade. No, that's not the right one. Let me go to, this is the website trade. I have to remark these. All right, so this is what we had. Beginning of the week. Oh, sure, Bearish Butterfly T-log. Yeah, you can do that. Right, so all we had was an entry. There have been no adjustments to the Bearish Butterfly. We entered this on 725. We've just been sitting here because the market's been sideways. So no issues with this trade. Like I said, if the market goes up, we'll be rolling up and adding. As far as the M3 trade goes, this is what we looked like on Monday. We were just in regular 1100 butterfly, which was, I think, rolled back from 1120 earlier in the month. I do the T-log here. We started out at 1120, ended up rolling back, which if you remember at the time, when we rolled this thing back, I said I'd be more tending to leave it because I was pretty sure the market was bottomed and we're going to be relatively stable. Actually, I should mark these to make sure I have profit and loss correct. So we're up 264 as of this point on Monday, and this stayed the same until Friday. Friday it kicked our delta up to about minus 75, but we were outside the tent at the time, so I went ahead and added these two verticals here. I'm sorry, 1100, 1110 verticals, as can be seen here. Actually, that was done on Thursday when we were outside the tent. And as of the end of day, we're up $709, so we're about break even. And running minus 50 delta, which is normal, and a position that looks like this. So as we get our continued up move, we will flatten ourselves out and just run with it. So that's what that is all the September trades that we have on. We're waiting to put the ROCK trade on. The ROCK trade is going to go on Wednesday. Per schedule, we're waiting to put the October Bearish Butterfly on, which is going to go on Friday. We're going to, and as far as a V condor goes, I did put the October V condor on Friday after options expiration, which is pretty much in the same position as our September, which if you've listened to me at all, I do not like that. I don't like having two V condors essentially in the same strikes, which is what we have here. That being the case, I'm going to go ahead and enter and trade this anyway, but I am very aware that this October position and the September position are pretty much going to lose under the same situation. So I'd be a little bit quicker than normal to shut the September down if the market gives us too much of a problem, so that we don't get two max loss trades at the same time. So that's just a precaution I take on a V condor if I'm positioned exactly the same. And unfortunately, the same thing for the Bearish Butterfly, right? I don't like them to be positioned at the same strikes, and that's probably what's going to happen this month. So I'll be watching my September position a little bit more closely. I might be more tended to jump out of that one and focus in towards the October if the markets give us too much of a problem. Although I'm not expecting that. I still think the markets are turning relatively sideways. I do think we might see 1170, and the market may back down a little bit. I would not expect testing new highs, not at this point anyway, unless some issues get resolved or some really good news comes in and pushes us higher. But those are my expectations for the month. Those are the trades, and this is how we're doing so far. So are there any questions? Do I see any advantage to starting October M3 earlier? Would I wait till 56 days to expiration? There is, I don't see any advantage to starting it earlier right now. There's no, if I had some solid information on where the market's going, I mean, other than we're slightly bullish, I don't see anything solid, nothing concrete here, so I will, I would tend to wait until 56 days. Just wait till the end of the week. You might have some interesting information by the end of the week, especially a NASDAQ breakout that holds. Right? We get a NASDAQ breakout that holds. That's some interesting information. Maybe a good reason to position yourself. Maybe slightly more bullish. Okay. But as of right now, I don't have evidence that's going to make me want to do that. All right. Is there any way you can show people's questions in your window? I don't know. I will have to find that out in GoToMeeting. So if I can, that's really not an issue. I don't have a problem doing that. But as of right now, I don't know if I can or not. All right. So here's an interesting question, Alexis, and thank you for that. And I'm going to almost beat you up a little bit, but that's okay. I do encourage you to ask it. I mean nothing bad by it. It says, do I have any service that I can see real entries and adjustments for your trades in order that I can adjust my trades with you? I am strongly against follow-along services. They don't teach you how to trade. They teach you to kind of be a puppet and kind of trade along with other people. I see more traders get in trouble that way, and traders with that type of a mindset typically do very poorly in the markets long term. You're much better off learning strategies, adapting them to yourself, and going with it than trying to follow somebody. Trying to follow somebody, you're going to have very limited success in the markets. And if you do have short-term success, and this particular person, their methods fail for whatever reason, then you're typically going to have, I mean, you're not going to know what to do with yourself. So, and we saw this a lot back previous to 2008 when people were doing iron condors and these follow-along services, and the markets changed and these iron condor strategies didn't work anymore, and next thing you know, all these people who quit their jobs following somebody all of a sudden were kind of looking for their jobs back. So I strongly discourage that. So no, I don't, and I don't see actually having one of those either. All right. Okay, do I see the ROCK trade again being an M3 for September? I did not look at the September ROCK trade. However, just by knowing what's going on in the markets, I would say as of today, it would definitely be an M3 entry. I mean, we can do an entry check, but I would say more than likely it's probably going to be an M3 again for September. Volatility is up and the markets are kind of sideways, which tends to put you in that position. All right, would I do the V condor and SPX with the same rules? Yeah, the V condor and the SPX with the same rules. You might want to adjust your wing width or your straddles, but I have people doing V condors and SPX, NASDAQ, and the Russell, and they're all pretty much the same rules. So yeah. If I have long calls, next question, if I have long calls on the M3 position, is there any advantage on taking them off and adding more put verticals? Okay, yeah, so this is playing volatility with an M3. So the thing with the M3 is it's such a diverse trade, and you can do so many things with the trade. And one of the things that you can do with it is you can play volatility. If you asked me this question on Friday, when the market was down and the volatility kicked up, I say yeah. So the advantage of having verticals on versus having a call on, or being heavier in the verticals versus heavier in the calls, is that the verticals are going to be a lot more responsive to a volatility drop. And the increase in volatility on Friday Would have been a great opportunity to drop some calls off of an M3 trade and add some verticals in and correct your delta. And you would have got a nice volatility kick today with the 10-point move up today. I would say that by the time the market opens and you kind of get to trading, that advantage would be gone. But Friday would have been a good time to do that. I would have done that with some of my positions had I been around Friday, but I've been out all week on vacation, and I'm going to be out today as well. So I'm going to be back to normal schedule on Tuesday. But that's a really good question. Yeah. So one of the things with the M3 is you can't play volatility, and if the markets are volatility is up, you can go in with an unhedged M3, and as the volatility drops out, you can transition over into calls. And if you get a harsh market pullback, you can drop the calls and go back into a vertical and play the volatility thing there, which is kind of a fun game to play as well. So very diverse trade, very good question. Thank you for that. But as of right now, I don't think there's an advantage to take them off and put in more verticals, unless, of course, one of the things you could do with that is if you're having a volatility problem, you certainly could do that, and that will correct that, but that loses that's a different question. So in other words, if I'm in an M3, I'm out past my long strike, I could drop some calls, add some verticals in just to correct, put more negative vega, more positive theta further up in the trade. If the market continues up, that's generally, or if it kind of stalls, that's generally helpful. If the market comes back hard at you, though, you're going to feel the reverse of the volatility kick we just had. So, coming into a resistance level, I don't like to drop the calls, which we're kind of doing now. If we come into a resistance level and we drop the calls and the market breaks resistance and really takes off, then you would have been better off with the calls. If the market holds resistance and comes back hard, you're better off with the calls. So I tend to want to be more in calls and less verticals at a resistance level, and and kind of switch that around, maybe at a support level if I think the market's going to reverse for me. Okay, so do I always use 10-point spreads in M3 as opposed to maybe half as many 20-point spreads to help keep the conditions down? Right, so this is a question, do I use 10-point spreads always, or might I do 20-point spreads or maybe 30-point spreads? That's more of a question of what you think the market's going to do. If I'm thinking the market's going to just kind of go up and stay up, then I would be more tended to do wider spreads. If I think the market might kind of stall, I'm going to tend to do the shorter 20-point spreads. Or if I don't know, I'll do the shorter spreads. Here's the thing. If you look at the spread by itself, if I do 5 20-point spreads, I have a greater chance of losing money on that spread than I do if I do 10-point spreads. So if I do twice as many shorter spreads. In other words, the shorter spreads, looking at them, I'm more likely to actually make money on those spreads because the short's more likely to expire out of the money. If I go with the wider spreads, then my short's more likely to expire in the money. I may not make the full profit on those. That said, the more shorter spreads carries a little more volatility risk, so you kind of want to weigh that back and forth. I mean, this is when you start to get into more advanced concepts of the M3 rather than just kind of following the guidelines. And again, this is a volatility play. So if I'm expecting a volatility increase, I might not want to do as many spreads. I might want to do some less wider spreads. If I'm expecting the volatility, to maybe market to stall, the volatility to drop off, then I'd want to be doing more smaller spreads. So it's more of a volatility question, which we got to get into with one-on-one coaching if we do any significant one-on-one coaching. So yeah, so whether you do a wider, less spreads or more shorter spreads, it's going to be more of a volatility issue when we think the market's going. Okay, will I reposition my September M3 if we get 10 points past my upper strike or wait for a pullback? So my upper strike on my M3, let me see where that is. All right, so if we get up into the over 1160, for example, am I tempted to roll this up? I mean, by guidelines, we're supposed to, right? By guidelines, we're supposed to. Although, even within the guidelines, I'm okay waiting 1 or 2 days. So if I just shoot up, certainly I'm not going to roll up for an intraday move past 1160, but if I have an 1160 that holds for a couple of days, then yeah, I would roll that up. All right, yeah, using different size verticals is like a good topic for group mentoring. Yeah, that probably is. Let me mark that down. Yeah, one versus the other, which that's probably a decent group mentoring topic. Thank you for that, Andrew, to remind me, because whenever I'm thinking of ideas, I sometimes forget about stuff like that. Looks like that is all the questions that we have for the day. So I thank everybody for joining me, and I hope everybody has a great week in the market, and we'll talk to you next week. Bye.